Can penny stocks be long-term investments? Since penny stocks are frequently volatile, you might find that, after a few months or years, your investment has lost some of its value. Additionally, they are vulnerable to abrupt value declines caused by changes in the market or new initiatives inside the organizations involved. Due to the significant risks and possibility of above-average profits associated with penny stocks, investing in them demands prudence and caution. Few full-service brokerages even sell penny stocks to their clients due to the inherent dangers. Many of them are stock in insolvent businesses, startups with little to no customer base, or organizations with significant debt. With penny stocks, there are two methods to profit, both of which involve considerable risk. Shares that are traded for less than $1 are frequently referred to as penny stocks. Others define them as stocks with a market value of under $5. However, penny stocks or microcap stocks are those with a market value of less than $250 million, according to the Securities and Exchange Commission (SEC). Penny stocks typically trade on the OTC Bulletin Board (OTCBB), or the so-called pink sheets. Extreme caution should be used when approaching both exchanges. This is especially true for the pink sheets because, unlike OTCBB equities, companies traded there are not required to file with the SEC. Do not have high expectations, especially for trading on the OTCBB. Finding enough reliable data to draw a rational conclusion about whether the company will survive, let alone prosper, is challenging. Remember that there are no requirements for a company to continue to trade on the pink sheets or the OTCBB. Penny stock con artists make a living by seducing novice investors into funding worthless businesses with their money. You should stay away from a large list of prevalent penny stock frauds. This deception occurs frequently. Promoters pique interest in an obscure or unheard-of business. The price rises as novice investors purchase the shares. Once it is inflated to a certain point, the bad guys sell or dump the stock at a significant profit. Investors are rendered helpless. Free penny stock newsletters frequently disseminate these pump-and-dump tactics. These canines are promoted for a fee, either by the publisher, the author, or both. Read the small print on a penny stock newsletter's website before subscribing. It might reveal a financial connection to stock promoters. In contrast to the pump and dump, in this instance, the con artists exploit short sales to their advantage. An investor who sells a stock short is making a wager that the price will decline. In order to short a security, an investor will borrow shares from a broker and then sell them right away on the open market. The short seller buys shares at a cheaper price if the share price drops. After returning the borrowed shares to the lender, the short seller keeps the profit differential. Short-selling penny stock scammers cause a stock's price to decline by circulating untrue and negative rumors about the company. While investors hold a failing stock, short sellers profit. Sometimes a private firm merges with a public corporation to avoid the difficulty and cost of using the conventional listing procedures and to become publicly traded. Because of this, it is easy for a private corporation to inflate its stock price and fabricate its earnings. Even though some reverse mergers are legitimate, you can spot one by looking at the company's past and spotting sporadic activity in its merger. Mining frauds have existed throughout human history because of the appeal of gold, diamonds, and oil. In the middle of the 1990s, Bre-X was one of the most well-known mining frauds. False claims were made by the founder David Walsh that his business had found a sizable gold mine in Burma. Speculation grew rapidly, and by 1997, the company was valued at $4.4 billion using only penny stocks. The majority of investors lost everything when the company failed. Anyone with money for advertising can become an expert. Sadly, they frequently attract a fervent following. This kind of deceptive advertising makes the claim that it would reveal a specific method the financial guru employed to buy a lakeside mansion and a luxurious vehicle. For a one-time nominal fee, the expert guarantees to divulge his penny stock trading secrets to you. Discard the email and the package. The road to financial success in the stock market is not one size fits all. Avert solicitations from individuals who represent themselves as the new Thomas Edison and invite you to invest in the greatest invention since the light bulb. Shares of a stock are offered by the con artists with the restriction that they cannot be sold for a predetermined amount of time. investors are informed that this stock is in high demand. By the time the SEC finally takes action to shut these frauds down, the investors have lost everything. When selling to American investors, companies that are based outside of the United States are not required to register their shares there. Scammers in penny stocks adore this. They purchase unregistered shares of cheap overseas companies, increase the price, and then sell the stock to investors. The stock price of the corporation declines as a result of this influx of unregistered shares. While American investors receive little to nothing, the crooks profit. Market manipulation, fraud, and sleight of hand are commonplace in the penny stock industry. As the well-known incidents of Enron and WorldCom demonstrate, such abusive activities are not limited to penny stocks and microcaps. Having said that, how can you prevent being duped by dishonest penny stock marketers looking to make quick cash? To produce positive newsletter articles about their stocks, promoters use writers. They use exaggeration, ludicrous predictions, and occasionally purposeful misrepresentation to persuade people to buy worthless penny stocks. These advertising materials bear a strong resemblance to credible research papers. The penny stock investor needs to understand the difference between equity research and stock marketing. One option is to check the disclosures section at the end of the report to see whether the author is getting paid directly by the business they're promoting, which frequently comes in the form of a mix of cash and shares. If so, this is not a research report but an advertisement. The effectiveness of a company's management directly affects its performance, and penny stock companies are no exception. Even if it's doubtful that Steve Jobs would be in charge of a penny stock company, you can look into the management's track record. Look into the accomplishments and failures of the company's leaders and directors, as well as whether they have any prior experience that is even remotely relevant. Although penny stock businesses typically don't provide extensive financial information, it never hurts to double-check the financial statements they do publish. Examine the balance sheet to determine the amount of net cash on hand and any significant debt or liabilities that the company may have. It's encouraging if the income statement indicates that revenues have recently grown significantly. The corporation should disclose more information. It suggests increased corporate oneness. OTC Markets Group, for instance, separates its securities into 3 markets: OTCQX, OTCQB, and OTC Pink. These classifications are based on a company's level of investor participation, level of disclosure, and operational integrity. Trading penny stocks is extremely risky. The odds may be better in a casino. Invest in shares of well-established businesses with a track record of success to maintain a sustainable profit strategy, despite the possibility of short-term gains. Looking at companies trading between $3 and $5 may be the best course of action if you want to dedicate some funds to speculative plays. But only pull the trigger if you've done enough research to become convinced of your position. That's all for today. If you liked this video, please give us a thumbs up. Make sure to subscribe to our channel and hit the bell icon to receive notifications. Also, express your valuable thoughts in the comment section below. Until then, bye! Also, spend some time watching our other videos on the channel.